Hi, I'm Bill Spaulding. Welcome to WCS Money Tutorials. I-bonds were extremely popular when inflation was high, but now that inflation is declining, the new rate for I-bonds in May 2023 will probably be less than 4%. This video will cover why the 30-year TIPS that will be issued in August 2023, which will have some of the same features as I-bonds, including 6-month adjustments for inflation, will be a much better deal. With interest rates high, the stock market probably is not going to do well in 2023. However, there is one security that will do better than most of the rest, the 30-year Treasury Inflation-Protected Securities, otherwise known as TIPS, because it not only offers significant interest and adjustments to principal according to inflation, but has the greatest potential for capital gains, even better than the stock market. This video will explain why, and why the 30-year TIPS and not the shorter-term issues has the greatest potential for capital gain. And no, you don't have to hold it for 30 years to earn this money. If the economy enters a recession, then you may profit sooner than you think. Because inflation has been slowing considerably compared to last year, the inflation rate of the previous 6 months has only been 1.69%. This means that the variable rate on I-bonds will also be extremely low. The I-bond variable rate is set every May and November based on the most recent 6-month period for which CPI data is available. This video was produced after the release of inflation data for March, but before the fixed rate was set for May 2023. The fixed rate will probably increase a little more than the 0.4% set in October 2022, but it probably won't be much higher. The fixed rate represents the real return of the I-bond, the return exceeding the inflation rate. The following calculations assume that the fixed rate remains 0.4%. This is the formula for figuring the composite interest rate. If the fixed rate remains 0.4%, then the annualized composite rate will be about 3.79%. There are several reasons why the 30-year TIPS that will be issued in August 2023 will be a much better deal than I-bonds. The coupon rate will be 1.5%, which will probably be higher than the fixed rate for I-bonds. Because interest rates will be higher in August, TIPS can probably be purchased at a discount, giving it a yield to maturity that will be a little bit higher than the coupon rate, although this will depend on the auction. TIPS, unlike I-bonds, can be purchased for retirement accounts. But the greatest advantage that TIPS have over I-bonds is the potential for substantial capital gains that is non-existent for I-bonds. If you want to learn more details about TIPS, check out my other video on TIPS, which provides more basic information. A link is provided in the description below. There are two types of bidding, competitive bidding and non-competitive bidding. Most people use non-competitive bidding, but all successful bidders get the same rate, yield, or discount margin as the highest accepted bid. Most people and organizations can bid for treasuries. To be able to resell for capital gains, buy TIPS only from brokers. Treasury Direct does not allow the sale of securities. For better liquidity, buy from the largest brokerages, since liquidity will depend on the size of their trading platform. Mitigate wide bid-ask spreads by setting limit orders instead of using market orders, since prices will fluctuate within a narrow band as long as interest rates do not change. Bids must be in multiples of $1,000. TIPS are comparable to I-savings bonds. Both use the same CPI index for inflation adjustments. Both securities are exempt from state and local income taxes. Both are guaranteed by the U.S. government. The advantages of I-bonds over TIPS is that I-bonds have no interest rate risk, since redemptions are paid at face value by the U.S. government. Federal taxes do not have to be paid until redemption or maturity. Federal taxes can be reduced or avoided by paying for qualified educational expenses. Interest is earned from the beginning of the month of purchase, even if the actual purchase occurs at the end of the month. The disadvantages of I-bonds are that the minimum holding period is 1 year, and the last 3 months of interest are forfeited if redeemed before 5 years. I-bonds cannot be sold in the secondary market. I-bonds can only be held in Treasury Direct accounts, so they cannot be purchased for retirement accounts. Purchases are limited per calendar year to $10,000 per individual or per entity, although an additional $5,000 of paper I-bonds can be bought per individual tax return, but only by using your tax refund to pay for the purchase. Interest is paid every 6 months. The interest amount is determined by the principal, adjusted for inflation, multiplied by the interest rate, which is fixed for the life of the bond. At maturity, the greater of the adjusted principal or the original par value is paid. The coupon rate for TIPS is low compared to other treasuries because much of the return is in the form of principal adjustments. A primary advantage of TIPS is that they offer a real rate that will not change over the life of the bond. while the nominal rate for Treasury notes and bonds could drop below the inflation rate, resulting in less purchasing power. Duration measures the sensitivity of the market price of a bond to changes in interest rates. Duration is the weighted average maturity time of all payments. Graphically, the duration of a bond can be envisioned as a fulcrum placed under a seesaw so as to balance the weights of the present values of the coupon payments and the principal payment. Both a longer term maturity and a lower coupon rate results in a longer duration. A longer duration means that a security could be sold for a higher capital gain when interest rates decline. Although duration is a useful measure, the duration of TIPS cannot be measured. Duration depends on future cash flows, and because both the interest payments and the principal payment depend on the adjustments to principal, which, in turn, depend on future inflation, there is no way to measure the duration of TIPS. Nonetheless, it is certain that the duration is long, since the term of the bond is 30 years, and most of the cash flow occurs at maturity. This table illustrates the potential for capital gains. Because future cash flows for TIPS is unknowable, I displayed what the theoretical prices would be for the 30-year Treasury bond when interest rates decline from 5% to 0.25%. As you can see here, if interest rates decline to 1% or less, then you will have a capital gain exceeding 100%. This could happen within a few years. How long would it take for the stock market to double? Because the duration of 30 years TIPS is even longer, the price should increase even more when interest rates decline. But even an interest rate decline of only 2 or 3% can result in capital gains of 40% to 67%. This is the auction schedule for Treasury Inflation-Protected Securities, showing the auctions for original issues and for reopenings. Reopenings are simply another sale of a previously issued security, having the same maturity date and coupon interest rate as the original issue, but with a different issue date and purchase price. Higher interest rates in August means that the price for the August issue will be discounted from par value. It will have the same coupon rate, but the price will be lower, so the yield to maturity will be higher. Now, let's go over the details of the August calendar for the 30-year TIPS. The auction will take place on August 24th. The issue date is the 31st. The dated date is the 15th of the month. This is an important date because it is the date when interest starts accruing, and the reference CPI index for this date will serve as the base for determining principal adjustments, which will also determine the amount of interest earned. When you buy TIPS, you must also pay for the accrued interest plus the accrued principal from the dated date to the issue date. You will get the payment for accrued interest back with the first interest payment, but you will only get the accrued principal back either when you sell the bond in the secondary market or at maturity. Brokers only list TIPS after their sale or announced by the U.S. Treasury. This means that you will not see the option to buy these TIPS until August 17, 2023, which is when the sale will be announced. So you should mark your calendar to remind yourself of the upcoming date if you wish to buy. Interest rates are not likely to climb much higher. Any additional increases will probably occur before August, so August will be the best time to buy TIPS. The future price of TIPS will also depend on future inflation. If inflation is high, then prices will also be high. Although inflation in the past has typically been around 2%, which is the Federal Reserve's preferred rate, it will probably be higher in the future because there will be some need to pay off the enormous federal debt, especially when politicians are reluctant to raise taxes. Moreover, because of that debt, if another crisis occurs, such as another pandemic, then the federal government will have no choice but to print more money, since raising taxes then would be calamitous. And when calamities occur, TIPS will also benefit from the flight to quality, when people minimize risk by selling risky securities, then using the proceeds to buy safe securities. U.S. Treasuries are the safest haven, so they benefit the most from the flight to quality. So here is a summary of the advantages of buying 30-year TIPS. No credit default risk, exemption from state and local taxes, and interest and principal steadily increase. You can profit from substantial capital gains that comes from decreasing interest rates and from the flight to safety during economic turmoil, possibly even doubling your money within a short time. Many economists are expecting a recession soon, so August will be the time to buy. Thank you very much for your time. If you liked my video, please give me a thumbs up and subscribe. I would appreciate any suggestions, so please leave them in the comments below. Check out my website at thismatter.com for more than 850 in-depth fundamental tutorials in personal finance, investments, and economics. Check out my books on money at williamspalding.com. Thank you.